presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everyone. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I usually do the 10 o'clock to 11 o'clock Eastern Time, Tiger Technicians Hour. And my service here is the newsletter, the opening call. And we started a short position because this market is really very shaky right now. Okay. Let's get to this. The Dow is down 295 at 47,041. I have a left side, right side price time match that says that there's a chance that the Dow, if it's weak by the end of the day and a week tomorrow, could get to the 47,000. No, I'm gonna go back to the first one, 46,811 level. That would be within 2 days. If this is going to continue as weakness and there is no bounce, election day bounce, I don't know if we can call it that after election, we'll see what happens. All right. The S&P right now is trading at 6774.33, down 77. I can make a better case for this, that this is some kind of a top of 6920.34 on the 29th of October with the dreaded H. That's a pattern that I talk about very often. I'll just show you some of these patterns real quickly because a lot of us base my methodology on that. Three major directional moves: straight up, straight down, that's one; cup formation, that's two; arch formation, that's three; a mix of 1 and 2 or 1 and 3; the dreaded H, where it goes down sharply, rallies, fails at a peak A or a B, and then takes out the left side low. That's usually, you can go 1-to-1 to the downside. That's usually the technique that says, oh, be very careful. And that's exactly what we've got right here with the S&P making the 6,811 green 9-period moving average, the strong resistance to overpower, just to go above tomorrow to save the day. Let's go to the QQQ. We're looking at the Qs down 12 at 620.07. It's the same thing. I can call it a peak C1, C2 in the Chapman. Don't have to get into that right now, other than to say it hasn't got to a sell signal yet, but there's this arch formation, that little H pattern that we were looking at, took it out. We're at almost the low of the day on the 14-period exponential moving average, but that 9, like all of these indices, the 9 over the 14 is still extremely powerful, so it's going to take a really sharp, persistent drop for us to keep going down. We'll go through the VIX in a moment. IWM, the Russell 2000, we're looking at minus 366 at 241.77. There's that same pattern we were talking about. There's that H pattern, and it didn't take out the left side low today, but if tomorrow it goes under 240, let's call it 239. A move under 239 in the next day or two would say, there's a problem, and we could retest the low of the 10th of October of 237.56. It's got to have at least a pretty decent bounce from here to kind of save the day. Let's go to the SMHs, the semiconductors. Semiconductors, there's that dreaded H pattern, but this is very unusual. I can't call this anything but a peak C. There's a chance in the end I'm going to have to call this 372.78 peak C1, and then the lower high at 370, just under 370 as peak C2. I don't like doing that, but I might be forced to do it. There's still strength here, but it is down today, 11.5 at 354.73. You've got NVIDIA finally taking a bit of a dive, down 7, down a $200 stock down 7 is not taking a bit of a dive, but it is for this stock because it hasn't had a move to the downside like this since the middle of October when it hit 195 and dived to 179. Let's go to the bonds. Bonds right now are trading up 9.30 seconds. I'll go to the TLT. You'll see it a little bit better here. TLT made a double top at 92.19 and then 92.18 a week later and came tumbling down. And the yields did exactly the opposite. They took a dive and went to the 31.17 low of the first week of April, screamed up to the 39 level, and then they came down to 31.69 3 weeks ago, and they're now trying to rally. So that means that yields, instead of coming down, are bouncing off the 200-period moving average. A little bit of a double bottom there. What am I missing? I'm missing high-grade copper. Took a dive today, down 13 cents at 4.93. Did that. Oh, the VIX index. So this is going to be very interesting. Remember, we were watching this closely. The VIX index has been moving up, peak A and peak B. I don't necessarily do Chapman wave methodology with the VIX. It's something, it's an emotional thing, so it has its own rhythm. But look at the sharpness of the move. But the 28.99 high of the 17th of October, that was the regional bank scare. That's way up there at the 28 level. But we are, in fact, at 18.76, up $1.59. I'm watching this. At any time this week, if the volatility index starts to trade above 21.50, and the Dow is down triple digit, the S&P is down, I'd say probably 80 or more. I think that we're looking at a concerted effort to the downside that should take a good few weeks to resolve. In the meantime, I said I'd do this quickly. Look at this before we go to the break. Apple is trading down. Now it's up 91 cents to 269.96. It's actually holding pretty well. If you look at Amazon came out with earnings and skyrocketed to the upside, went to 258.60. It's pulling back, making a peak C right now after hitting an all-time high. Usually you don't fail at a peak C. You go to a D. I'm watching this closely because if Amazon this week starts to take out 245 support, that is a problem. Let's go to Netflix. Netflix trading right now at minus 11 at 1,088. You know that it made a round number, 1267.10 was the high back in early September, but that day it also had a 1260 round number open, pulls back, retests with a 1267.00 4 days later, and that was it. And here it is way down in the 1,080 area. That's a bit of a problem. Let's go to Goog. Googie is trading right now. Google is also at a peak C. I don't know if I can give it alternate counts, but it is down 278, down 6, having made just a week ago a 291.93 all-time high. We want to go to Microsoft. It was acting poorly. They wanted to do it, ran sharply. It went to the 555.45 was the high 1st of August. Comes tumbling down and then screws back up. It goes to 553.70, and then it has a round number open of 550 on the 28th of October. Whoosh, here it is down at 510. I want you to get to Robinhood. Robinhood trading down 9 at 137.90. It had 153.86 high on the 6th of October with 153 round number open, comes tumbling down to 120, goes back to 150 3 days ago, pulling back. So we've got a little bit of a problem here. I'll be back to Palantir as well. I'll be back straight off. This is Basil Chapman sitting for Tommy O'Brien. Be right back in a few minutes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. We're back, and this is usually where Tommy interviews me about my newsletter, The Opening Call. So let's start off this way. So, Basil, what do you see with the Dow down quite sharply today, and gold down, and the dollar's up? Well, Tommy, this is what I see. If you use as a benchmark Robinhood, it's right in the middle of a trading range, and it is kind of stuck there, but it's just starting to show some weakness. In the Tiger YouTube, I was asked the question, Basil, do you pay attention to the market breadth? Been lousy last several days, 1450 advances versus 3980 declines. So I have a measure. There are a lot of things that are in the back of my mind because I've just looked at the market intensely every single day for the last decades and decades, that there are certain things that just sit at the back of my mind. So there are certain stocks that I look at and I say, okay, if you're going to measure market breadth, what you want to see is the best of the best. How they're holding as the market starts to pull back. Are they the leaders to the downside, or are they holding quite well? Are they starting to crack? What's happening? So one of them that I've used just for the last week or two is one that we've been long since the 2022 area is Iran. Now this is in the AI. This is something different to anything in the market, but I use it only because it's held so well. And what you really want is a stock that's holding well during market declines, and it actually moves up like it has over the last couple of days. And that just gives you a sense of how intense the selling is. Because if it takes in many of the others that you really like and that have been quite superb players, that just says and that's where I would say my sense of market breadth says that breadth is starting to increase to the downside with the decliners and lessen on the upside. So I'm watching this very closely. It's held well. I don't know if it can keep holding very well, but these double tops, it made a 74.15 high on the 15th of October, pulls back sharply to the 46s and then runs up to 75.75 yesterday. And that's almost like a double top. I mean, I showed this a little earlier on in my show today. Now, am I going to remember all the ones that I was looking at? How many double tops there have been in the market? And to me, this just says we are due for a correction. A correction could be anything from 4% or 8%, could be deeper, but you've got to see how it unfolds. And if you're looking at GE, one that we still have a long position, small long position from the 338 level, look, 316.53 was the high back in around the 20th of October, pulls back quite sharply to 294, springs back, comes where? To 316.67. That's like a double top. I also look at round numbers. So there are a lot of things, talking about round numbers. Overnight, Palantir, we don't have Palantir, had a 222.00 round number high, is trading now at 188. All of these things I put together and I say that's the reason why we've started a short position in the market. We actually got rid of something that we had for over a year that did very well, and then it started to stall. I don't need stalling right now. I want some cash. We're getting cash together so that on this pullback, and I do believe it's going to be a rotational pullback, sector by sector will start to decline. As far as the actual numbers are concerned, we'll only know in a little while. For instance, look, we still have a little bit left of our Bitcoin because we got very cautious way back. And this is the Bitcoin that made the double top, 127,240 back on October the 6th, but it was 125,200 on August the 14th. So that double top turns out to be a peak D in the weekly chart. That's where you get very cautious. And what did I say? Be careful. And today it made that, remember the dreaded H pattern I was just talking about where it takes out the left side low in an H pattern? Well, it just took it out very sharply. And in the den, I was asked about it. Where do I think it'll go? And I said, if it takes out 99,350, there's a good chance that it could drop quite quickly. And my target would be right here. This would be right here, where the 9-period moving average in the weekly chart actually crossed positive, and now it's negative. And that was the week of the 9th of May, and that low was 97,960. So that would be the next level of support. So we have a number of positions that have done extremely well. We've taken little bits off. We have very little left of some of them. Some of them, like Iran, we have, that is, I didn't tell you what it was. Iran is right there. That is Iran Limited. It's the next generation data centers, renewable energy, GPUs. Now it just turned negative today, even at a nice bounce. It went to 46 after making a 73 high. So even the best of the best will be affected if this broadens out going into Friday. So with that said, I just want to also mention that, Microsoft, we've been long since I think it was 338, starting to pull back, made that double top from 555.45 in August to the 553.72 high late October. And I'm just saying, this is a great time to be raising cash. I see limited, even if there's a sudden turnaround to the upside, I see limited upside. But at the same, look at this. Here's the X. We have Bank of America, had it for a long time. And Bank of America, from our entry point at 31.98, I think that was quite a while back. That was December of 2023, so almost 2 years ago. We've held it the longest we've ever held it. We usually have it for a period, and then we get out, we start to make tops, and then we wait for it to bottom out, and we get in. This time we've had it for a very long time, and look what it's done. It's starting to stall right here. It did hit the 54 level. The target 54, round number high today. Unbelievable. I'm going to watch this closely, 53.99, but this one says 54. Look, it says 54. Well, I'm putting 54. That was the round number high. And that would be 54. Let me see if it's a round number high. Well, it's a round number. We'll see if it's a high. But I'm watching this closely because I've been talking about this for quite some time. Let me go to this chart right here. This is the XLF and the S&P monthly chart, long term. Look how beautifully the bottoms, look at this. You couldn't find anything as close. Look how the bottoms and the tops match so perfectly. And now we're making some kind of a top right here. In the pink is the, what happened? I have to type that in again. The blue is the SPY, S&P 500 trading vehicle, and the pink is the XLF, the S&P Select financials. And look at that. Even the low was exact. So I'm watching this very closely because they've hugged one another together. They've been moving in parallel motion, got a little separated here, and now we're going to be watching what happens over the next week or so. So within that context, we've raised cash. This is a peak, and that is a D. Okay, we've got our D right there in Bank of America. Leg E in the weekly chart is still looking pretty good, but I'm watching it closely. If it takes out 52 on a closing basis over the next week or so, that says, watch those financials as well. So there is, I did that. I did the Bitcoin. I did that. Yeah, so I just wanted to show you something else. AIQ, which we've been long, for ages. We've been long since November of 2023 as well. It's 2 years. Had very many cycles, but this last one yesterday made a leg D, and today it's a peak D. D is where you get a little bit cautious, and it's pulling back sharply for the first time. So the Global X Artificial Intelligence ETF, watching it closely at 51.64. If it closes under 50 at any time in the next week, be careful. I'll be back in a moment, and we're going to interview Tim Ord straight after this.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and as always at 3:30 Tuesday and Thursday we have Tim Ord from Ord Oracle. And Tim, how are you?
Good. Glad to have you on.
Pleasure. Tim, before we do anything else, can you just tell folks how they can reach you, please?
You can reach me at www.ord-oracle.com. My email address is tim@ord-oracle.com. I'm also on Twitter, which is oracle.com, I think it is, or something. But yeah, I'm on Twitter. You can look for me. So let's get started. Let's look at the markets here. All right. Actually, at one point, I think it was last Thursday, I was predicting the market's going to pull back down into that 670 area. And anyhow, I did get long. I think it was last Thursday or something. I'm long the market. There's other indicators I have on a bigger time frame suggest this rally's not over. But anyhow, I was predicting a pull back down to that 670, which is basically where the support area is right here. And when I did this chart, we're right very close to it. And the trend was 1.2. We had 200 downtick readings. Trend since then is up around 1.4. And so this is a bottom. When trend gets up around 1.2 and higher, that predicts market has panic in it. Panic only forms near lows. And I marked the previous times here and here where the trend readings got above 1.2. And that's the support area. That's usually where the rallies start from. And once you get a panic area, if you go back into it, normally the trend starts to rise again, showing that area does have that area has support. And that's exactly what's happening here. So we're looking not at a downtrend beginning, but an uptrend is about to begin. Can it get into the 670 area? Maybe. But usually when the trend closes up around 1.2 and higher, that's usually it for the downside. So we're looking at a low probably in this vicinity right now. Is it today? Is it tomorrow? Don't know, but I think something that the election in Virginia and New York is probably having a little bit of lean on the market. But the outcome should be bullish for the market, maybe not for New York, but as far as polls are concerned. But anyhow, a rally is about ready to start. We're in the vicinity of a low. I'm already long from last week. This is the monthly chart of the SPY. I did this earlier today. Previous high was 689.70. This is on the SPY. And I just want to point out, markets never make a top. Where's my little button? Here it is. Markets never make a top in higher volume. Usually, at a minimum, they go back up and test the high. And if the test comes on lighter volume, that's usually a resistance area, and market could pull back. If it goes back up and tests a higher volume on the test of the high, usually the market keeps going. And so far, since August, we've been making higher highs and higher volume. So it's not a top. The last time we made a higher high on lower volume was back in, this was February, and the market pulled back. So that high came in, this high here, tested that high. You can't quite see it, but it was on lower volume. And that was a warning sign the market may pull back, and that's where you got the decline coming from. Here we don't have that. So at minimum, we're going to go back up and at least go higher above 689.70. If volume's higher, we're going to keep going. If it's not higher, that could be resistance. We'll have to wait and see. But in general, I think we're going to keep rallying all the way into possibly January. So the bigger trend's bullish. At a minimum, we're going to test 689.70 and possibly even keep moving higher. So S&P-wise, we're we also have seasonality bullish all the way into year end. So the next 2 months, this month, next month are probably up months. How much of an up month? I think at least 5%. There's some other stuff that suggests maybe higher, but we got a decent rally in front of us. So we're long, we're staying long, and we'll see what happens next year. There's another statistics. I do some. I have a paper that I do that has quantitative analysis, and this would be the third year in a row where the market was up double digits. It was providing this year remains above 10% up for the year. And so we got 2 months to go. I think that will probably happen. But last year we're up double digits. The year before we're up double digits. And most likely we'll be up double digits this year. If we're up 3 years in a row with double digits, the year after, which is next year, is usually down. Depends how much, but the best month going back to 1930, I think the best year was about up 4%, but majority of them were down next year. So this is next year could get a little rough. How rough, I don't know. But this rally over the last 3 years is just not going to continue. So there's a good chance there's going to be some sort of high next year. Where that comes in January, February, March, or April, it's hard to say. We'll have to actually look at the monthly volume and see what it does going into January, February, and March or April. But probably the first part of the year is going to be some sort of high, and that's something to look for. But between now and then, it's worth staying long. But next year it doesn't look good, as good. I'll put it that way. So,
can I just ask you the trend line, that curvy line at the very top of all your bars? Is that a Bollinger Band? What is that moving average?
Yeah, that's a Bollinger Band. It's a weekly Bollinger Band standard deviation. So,
and it's hugged it beautifully, huh?
Yeah, it's just hugging beautifully. Volumes, you don't want to get too far above it. If you get 50% above the trading range, in other words, open close is above the upper Bollinger Band by 50%, a lot of times you'll get a pullback. And I'm thinking there's a good chance, maybe not November, but maybe December, you're way above it. See, for instance, this was extended. I don't know if you can see this, but if you're closed like up here where we are, if you're 50% above the upper Bollinger Band, a lot of times you get pullbacks. So we don't have any examples on this chart.
No, it's just been straight up, yeah.
Yeah, it's kind of trippy. You just want to hug the upper Bollinger Band, and you don't want to get too far above it because that also means a pullback. But I hear the music.
Okay, good. We're looking for which chart are you going to go to next? Are you going to stay with the SP? Or are you going to go to the GDX? Go to the gold.
We're going to go to the gold.
Okay, that's wonderful. Great. We'll be back with Tim Ward, folks. Basil Chapman sitting for Tommy O'Brien. The Dow is down 239. S&P's down 70. We'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
In all the years, I must say, every time I hear that Tom O'Brien, I love that little section. It's just, I like it. All right, we're back with Tim Ord, and we're going to go to the gold chart. Tim, fire away.
All right, this is the bullish percent index for the gold miners index. Bullish percent index measures the buy signals using the point and figure method for the the gold miners index. So when it says 68%, in other words, 68% of stocks in gold miners index are on point and figure buy signals. So that's what that is. Then I did a ratio with GDX, and it works pretty well. This chart goes back to 2008, and I put an RSI on it, which is the top window up here. And every time it gets below RSI below 25. It's been as low as 19 and moved up here a little bit, but we're still at 22.42. So what this indicator says, we're in some sort of a low area. And I marked the times. This is a weekly GDX going back to almost 2006, and marked all the times with circles. And we're in a buy area right now over here. And it can be a little bit sometimes over this area here. It just marked a low, went sideways for several weeks before it got going. So it gets you in the low areas, but it works really good. I think so far it's done it 12 times, not counting this time, which is on a buy signal. 11 times before that, he had one failure, so the percentages worked out 91%. So there's a high probability that we're at a low in this vicinity. This is a weekly chart. Doesn't pick out the exact day, but it gets you pretty close. So we're in a low area. So I think it's I didn't put a GDX chart up because I think GDX is making a low this week. But here's another momentum chart, kind of shows you what's happening here. Even though the top window is a GDX, next window down is a daily cumulative up-down volume. It's a cumulative now. It measures on a cumulative basis. Next window lower is a cumulative advanced decline. And every time it stays above the mid-Bollinger Band, that would give a buy signal back, looks like about approximately February here. As long as these two indicators stay above the mid-Bollinger Band, if you can see, we're way above the Bollinger Band. Bollinger Band's down here. The uptrend's intact. So you can have pullbacks, but as long as it stays above the mid-Bollinger Band, which is all the green areas, the uptrend's intact. The last time it gave a sell signal was back in November of 2024. It didn't pick, it's a little bit delayed, but kept you out of this decline that lasted into basically February. You got out in October, it looks like, and it got you back in late January or possibly early February, so it stayed out. And so far, this is a longer-term indicator. Momentum in general remains up on up-down volume advanced decline, so trends up. So on a short-term basis here, I'm just looking for a short-term low. So, but the bigger trend's up. This is a real big trend. I'm thinking this is a 12-year cycle from here to here. The chart goes back to 82, and it measures the times when the middle window is the monthly XAU to NDX. So it measures the gold stocks against NASDAQ stocks. And so as long as these so I put an RSI with it on this ratio. As long as the RSI stays below 50, that says the NASDAQ is outperforming the gold stocks. When it's above 50, which is starting right here, stays in the blue area. When RSI is above 50, then gold stocks are outperforming the NASDAQ stocks. Then
what is it now?
Huh?
What price is it at now? It's a little difficult to see.
What price of what, the RSI, you mean?
Yes.
RSI is coming in at 57, almost 58.
Okay, good.
This is we're over here on this area right now. It gave a bullish signal intermediate term here, I don't know, mid 2024, because once the RSI breaks above 50 is your signal, and this went to 70, so it was an initiation of an uptrend. So this cycle may go on for another 12 years, which would add 12 years to 2024. You come in at 2036. So we'll see how that happens. But these gold stocks are strong. We got a little consolidation going on now. Excuse me. But probably gold stocks are outperforming the NASDAQ stocks over the next 12 years. I'll put it that way. It's worked out pretty well in the past. A lot of these gold stocks, the little ones, which I want to, we got a couple of minutes here. I just want to point out some buy signals. How do you choose gold stocks? This is I showed this last time. Is BE Bellow Sun Mining. To get a buy signal, you need, this is a monthly Bollinger Band. It's got real narrow. You know anything about Bollinger Bands? When the Bollinger Bands start to squeeze, you got a big move coming. That worked out perfectly, and the signal comes when you get a sign of strength through the mid Bollinger Band on a monthly time frame. And if you notice a big jump in volume right there, smack through the Bollinger Band, so that's your buy signal. Comes around a nickel. And so as long as there's monthly Bollinger Band, mid-Bollinger Band's going up, the uptrend's intact. So it's quite a ways from it. Here's an example when you get above the Bollinger Band, 50%, you get these minor consolidations. There's another 50% above Bollinger Band, you get another consolidation. But as long as you're above the mid-Bollinger Band, the uptrend should continue. So I'm long this stock. Here's how it works in the past. This is RIO2. Anyhow, it gave a buy back in, looks like probably December right there. Big shot up in volume above the mid Bollinger Band. And here, a big rally. So it gave a signal around 40 cents. You're up around $2 area. This is Canadian, but that's how it works. Here's one that just flipping to a buy signal. I brought this up last time. Is Walter Lane Research. This is a Canadian symbol, but it did. If you notice how big this volume is,
Ooh, look at that! Yeah.
Yeah, it's never been higher going back for a couple 3 years. So that's a big surge through the Bollinger Band, and you got a little consolidation going on. But once it gets through the mid Bollinger Band on huge volume, you can have consolidations, but I think this is still in the early stages of a major move up. We got a little bit more time. This is West Haven. We talked about this last time. We got a bicycle back in mid 2017. It's kind of the same thing, not a That was a big volume jump back then compared to what it was before, but now we got a huge volume here. So this is a kind of bicycle too. I hear the music.
That's fabulous. So folks, Tim Ord, Oracle, check him out. It's fabulous work he does. We've listened to him for months and months just talking about the gold stocks, and they've been performing fantastically. Now they're taking a bit of a breather, and that's what he was talking about. Hey, Tim, thank you very much. Look forward to Thursday's interview.
All right. Talk to you Thursday. Thanks.
Thank you. Right, bye-bye.
Is on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. Final segment, we're looking at the Dow down 240 at 47,097. Let me give you the scenario that I'm looking at and the parameters. If today's low of 46,877 in the Dow is taken out and we go to below the gap and we go into the, I would say the 46,700s, I have to conclude that this is now going to be a sell signal in the Dow and could be updated very quickly to a sell mode, implying more selling should come. However, if there is, for whatever reason, if there is a bounce, today's high is 47,274. If we close sharply above today's high, that says there's a chance we can make a cup formation and go to slightly higher highs. I don't think there's very much in terms of the actual highs themselves. 48,040 was the Dow. S&P was, let me give it to you right now, S&P was 6920.34. It's quite a way to go. It's not quite too much, 180 points. That's a lot. But let's just say it does bounce, and there is a bounce. I don't think it's going to go much higher than 69.40 max, and then I think we come back sideways. More than anything else, I think we're looking at a rotational correction sector by sector. You've seen the gold stocks. One of the reasons why we got out of most of our gold position is because there was a fantastic rally. Now it deserves a break. Whether we do have a rally very soon or not, it doesn't matter. We've taken the money off, and we've kept a core to give us a sense of what's going on. The same with our silver stock. We've kept that just a little bit. We've taken really good gains. I don't know. I think that this dreaded H pattern is going to work out. It should be pulling back further, especially with the dollar moving very nicely to the upside. So this, I think, is a very select time. The best of the best are starting to come down. They're taking a well-earned rest, and I'm going to watch the SMHs, the semiconductors. If the semiconductor closes under 346, I think that's a problem short term. So have a great rest of the day. Check out my opening call, my daily newsletter, and I'll be back tomorrow at 10. Tommy will kick us off at 9. Have a great evening. See you tomorrow.
Building wealth